Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, folks. Morning. Hope you're all well, wherever you're tuning in from this morning. Yes, I am back. I've been on planes and out and about, so I apologise in advance. I've missed a couple of Wednesdays, but hey, listen, back property management at Wealth Coffee Chats. I hope it's nice and sunny and warm wherever you're tuning in from. It certainly is here up in southeast Queensland. And today we got a bit of a doozy. I thought, again, as you guys know, if you've been tuning in throughout 2024, 2025, you know I love a story. And certainly today I've got some market commentary for some expert leaders out there, and I'll put my own 2 cents on it. And if you guys are willing as well, jump in the chat throughout the next 10 or so minutes. Always love to hear your opinion, your feedback, how you see 2026 playing out when it comes to rents. So today, if you are tuning in for the first time here in 2026 on a Wednesday for Wealth Coffee Chats and you're wondering who I am, my name's Kat Shosted. I'm here representing the Property Management Group here, part of the collective team. 15 years in the industry, certainly has gone very quick. Learned a lot of things, learned what to do, also learned what not to do. And certainly on a Wednesday, we try to unpack that, share some insights and some feedback for you guys to help you put yourselves in better positions, make better decisions, more informed decisions, as I say, and certainly help you, keep safe and help you hold that asset for a longer period of time. So that's what I'm about today. We're going to share some commentary in and around the rents because in 2026, I can tell you, rents are still rising, team. And here's the one thing you need to know. And that's what we're going to talk about today. But maybe pop in the chat. What have you guys seen in the past 6 weeks of 2026 when it comes to rents? Have you seen rents continue to increase? Have you seen the vacancy rate in your marketplace tighten again? Maybe it's the opposite. Maybe you've got a lot of stock. If it's new development, let me know in the chat. Love to hear your thoughts, and we'll kick on with today. So most of you guys have seen and heard Dr. Andrew Wilson from My Housing Market, whether it's in the flesh or via a mentoring session over Zoom. Perhaps you've seen him on socials as well. Certainly an expert in his field when it comes to data around the property market. And, he posted something up, I think about a month ago now, as we got into 2026 and around some rents, what rents were doing, his opinion, the data behind it, vacancy rates, average rents, etc. So I thought I'd grab that today and just share some statistics with you guys to just get a bit of context to what's actually happened in the first 6 weeks and perhaps what the next 11 and a bit months might look like for you as a landlord, certainly. So I'm going to rattle off some stats here, team. So look, when we're talking about rents across capital cities across the country. Certainly what we expect throughout 2026. As I say, rents are rising. We can expect that to continue to rise. House rents, no different from the past 12 months in 2025. Did you know? Still at number one, Perth. Perth is a top performer when we are talking about weekly rent for houses and for homes. Perth in 2025 up 3.5% on the annual rents. Brisbane up 2.5%. There goes Brisbane. Sydney not too far behind, 2.5. Canberra, 2.1%. Bang, annual growth there for rents in homes down in the ACT. And the Melbourne market's steady, which is good. Certainly, we've been talking about for the past 6 to 9 months anyway, that we believe, in 2026, there's that resurgence for the Melbourne market, and certainly signs are steady at the moment. Again, no changes, and no surprise to understand that Sydney is the most expensive place in the country in terms of capital cities, and finding a rental home. The average rent for a house in Sydney, $820. Most affordable is down in Melbourne, of course. No changes there. $580 a week on average to find a rental home in Melbourne. So again, you can look at it two ways. As a landlord, we can say, well, hey, there's some opportunity down in Melbourne and we expect some growth. But as a renter as well, because some of us rent vest potentially, Melbourne is the most affordable marketplace if you're looking at it from that angle. Bob's online. Morning, mate. Hope you're well. Thanks for your support as always. Bob knows all about the Melbourne market, so he's your man if you want some more detail, because I'm going to run out of time otherwise, so I'm going to keep myself on track. But when you look at that annual rent growth in 2025 across the capital cities, there's some really good stuff there happening. Sorry, the data I shared before was the last couple months. My apologies. The annual rent growth, I've mixed my stats up. Sorry, team. The annual rent growth is a lot higher in some of those marketplaces. So again, Brisbane 7% plus, Perth almost 5%. So there's some marketplaces doing some really good things, I think, is the summary we take away when you look at the capital cities across the country. Now, what does that mean for vacancy rates, right? If you're in the marketplace, I don't know, you're at your weekend barbecue and someone says, hey, what's the market doing? I get that question. If I had $1 for every time someone asked me how the market's going, I'd be buying more property, that's for sure. But certainly vacancy rates, right? It's something we like to talk about. It's something that we like to understand as property managers, as investors, landlords. And certainly, we've found over the past 6 to 12 months educating tenants as well, in that respect of what is actually happening when it comes to supply and demand. Now, I think it's no secret that we have a significant supply chain issue when it comes to producing new stock, so I won't harp on that. But again, when we look at Dr. Andrew Wilson's data, and you look at some other things on SQM Research and some other really cool resources that we as investors get to, utilize when it comes to trying to make informed decisions around our rents, what we're going to do with it. Certainly, when you look across the country, houses in particular, across the capital cities, there's no vacancy rate higher than 1.5%, right? It's either at 1.5% across the country for houses in terms of vacancy rates, or lower, right? You can go to Perth, you can deep dive in on Perth, and it's under 1%, right? I think at some point last year it was like 0.4, 0.5%. Something pretty crazy, right? So what does that mean, right? If we've got vacancy rates at 1.5%, what does that actually mean? Now, we're talking houses. We can zoom out. We can include units into the conversation, which I want to share some data with you in the moment. But certainly, again, the vacancy rates are well below what we would consider to be equilibrium of supply and demand. And so obviously, naturally, as a foundation, we've got a supply problem. What does that mean? What do we do with that information? Is it going to get fixed anytime soon? Likely not, right? Likely not. So what do we do? Because today, team, over my time, during my week, during my day job, the conversations I have, the people I meet, the things I experience, there's two types of activity when it comes to tenants at the moment. There's the have tenants and there's the have not tenants. And this thing around affordability challenges, cost of living, whatever you want to call it, is real, right? I can list a property, a townhouse in an inner city suburb of Brisbane, which I did about week 1 or week 2 of January. And the property on appraisal, based on what we feel it was going to fetch in the marketplace on comparables and things like that, we said it was about $1,000 a week, roughly, give or take. Now, the place ended up renting for $1,100 per week, right? We tested the market, and within one open home, it was done, right? And so at the higher end of the market, the people with the incomes and that sort of stuff, the tenants who are choosing, I guess, property on location and lifestyle and convenience and all the things that they're after, proximity to city and infrastructure, they are willing to pay more for that property. The other end of the spectrum, if we've got homes a little bit further out of the city, depending on different demographics and areas and whatnot, we are seeing applications come through from tenants where there are income challenges, right? Affordability challenges, right? So there's two ends of the market that we're seeing at the moment. So depending on your strategy and the properties you have, these things are real. Because the thing to it is, okay, well, if I go to Melbourne, I can get a house for $600 per week, right? Sounds pretty good. And if I go to Sydney, I'm paying the most. It makes pretty much sense. What we've actually seen in 2025, and I think what you'll continue to see in 2026, is that unit rent growth is actually has outperformed house growth in 2025, and potentially will still continue to do that in 2026. Well, why is that? Everyone always says, get a house, get the land, right? But the units are actually showing really good rent growth. So if you've got a unit in your portfolio, I suspect you're seeing some rent growth in that particular property. And perhaps 2026, you continue to see that. Why is that? Well, it comes back to affordability, right? Tenants will likely have, and we all have, even as landlords, we have generally a ceiling on what we can spend, generally speaking. And so at some point, tenants are kind of capped when it comes to how much of their income, disposable income, they can put towards a home, essentially. And so naturally, units were on average cheaper to rent than homes, and therefore, homes became sort of, I guess, a wish, if you like, because it was a stretch for tenants to afford that $800-900 plus a week rent, and all those units at $500-600-700 per week was in the affordable range. Tenants made sacrifices, and then more demand went towards the unit product based on price point, and therefore increased the price along the way, because again, there was just more demand and there wasn't enough supply. And so that's kind of what happened in 2025. You can look at some other commentary around, yes, migration slowed a little bit, but again, supply is a real problem. What happens on the back of that? Well, listings are down. Rental listings across the country are down, hence the vacancy rates. Tenants today are not just going to vacate and move for the sake of vacating and move because of preferences, right? Why is that? Well, one, it costs them to move, of course. There's not a lot of other options out there for them. And if they do go back to market, they're competing with everyone else as well. So we are seeing a bit of a trend of tenants staying put, looking for that security. They're happy to pay a little bit more to just sit tight rather than go out to the marketplace in an uncertain marketplace and not know whether they're going to get approved in a quick time frame or not. So we're just going to understand that. But essentially, with low supply, you get increased competition, and increased competition means more rent. That's the only way it works, right? So in 2026, I wrote some comments down, expecting conditions to tighten again. Don't see that changing. Rising rents, I think we'll continue to see that in the capital cities. Now, of course, I'm looking at this. I'm zooming out. You can go into your marketplaces and get some more data, speak to your coaching team. You can reach out to me as well. We can talk about your particular marketplace in particular, but certainly with vacancy rates across the board, they are quite low, so expect that. I mean, what happens when interest rates go up? Most landlords just pass it on to the tenant. So again, we even have to talk about supply for a moment. We can just talk about that particular factor. So as you can see, there's a few things that just everything gets passed on to the tenant in respect to rents. So the number one thing I would say, team, in 2026, the number one thing you need to know when it comes to kind of navigating this, and why would you want to do this? Well, you just don't want to miss out on any opportunity to maximize your rent. That's the bottom line. That's how I see it. Maybe comment in the chat if you got another opinion, but certainly I think it's really important you make sure you're not or even if you're going to not increase rents, that you actually understand what the opportunity cost is around that. So because in most states and territories, if I'm not, I'm pretty sure I got that correct. I'm pretty sure in most states and territories, you can only increase your rent every 12 months, team. You get one shot a year to do it. And so the one tip you've got to do is just really understand with your property manager where the market sits, where the real market sits, right? I can show you guys some case studies on marketplaces, and we did this with the coaching team the other day, where the marketplace is suggesting mid to high fives, and we're renting the properties for 600 plus a week, right? So we know we can generate another $2,000 to $3,000 per year on a gross revenue line item for our clients and help with that holding cost along the way. So every dollar counts. Certainly get ahead of your rent. Get ahead of your annual rent review team. Get a second opinion if you need. Really get the information in front of you before you make that informed decision, because otherwise you're going to have to wait 12 months before you get that opportunity to do it again. And in some cases where I find landlords are too far behind, right? We're not giving up $10, $20 per week. We're giving up $50 to $100 per week. So Kobe's got a poster like me, but awesome. Love that. Yeah, cool. I can't remember where I got it from, but it's obviously quite common. So thanks for the shout out, Kobe. Awesome team. So that's it for me today. It's all about Rents Team 2026. Make sure you're on it. If you need some help, you've got the 6-star team around you. As always, you guys can, my email below. Any questions? You want a second opinion? It's free. Reach out. I'll do it for you. Of course, you got your coaching team as well. Bob's online and a few others, I'm sure. Don't hesitate to reach out to your coaching team and get to a pop-up mentoring session whenever you can. So I know there's one tonight in Sydney. So if you're not doing anything tonight, reach out to your coaching team. They'll get you a ticket and you can go see Jason, Sam, and Andy Fenton. So that's it for me, team. I'm going to log off. I'm going to leave you there Wednesday. Thanks for having me back as always. And you guys have a good Wednesday. Don't forget tomorrow, 8:10 Queensland time. Financial planning team will be back on if you want some more content. See you soon.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-star team here at positivementor.com.au.